Okay, traders, Oscar here. I got to do a very fast video for you because markets are flying and I want to show you a chart segment that should really help you stay in tune with where these markets are going next. This video is being filmed on Wednesday for Trading Wednesday into Thursday. That's August 10, 2011. Quickly, let me say this. Proceed with caution, right? That was what I told you in our last video, the one right before this. And I said, look, yes, we're going to come off on Tuesday, but then after that, proceed with caution because you may get a rally after that, right? Well, we've had our rally, as you can see, and now I want you to recognize that the 200 bar moving average is extremely important here on the weekly charts. Watch this chart segment. After this, I'm out of here, traders. So look, stops are in, emotions are out. I'm done. Look at the chart segment. See you in a little while. Okay, traders, so now that we've had this talk about these charts and the markets and the fact that you should not be panicking and this is a usual summer pullback and not a crash, let me show you a chart now that should help you realize that what I'm talking about is correct and will likely be the end result of this big crazy move that we've seen this week. Traders, this is the Dow Jones Transportation Average. It is deemed the leader of U.S. indices. This is the 200 bar moving average. This is very closely watched by the street. The 200 bar moving average is a big, big indicator of whether traders should put their funds in the market short or whether they should go long. And being that the street is watching it, you know that when the market hits it, you will get reactions with that in mind. 200 bar moving average on the weekly bar chart, the Dow Jones Transportation Average. As you can see, when it got to the 200 bar moving average, it held and rallied. When it got to it again, it broke severely. Now, this is a weekly bar chart, traders. Every one of these lines represents a full week's worth of trading. A lot of time here. You hit the average, you break severely, goes all the way down to the lows that were made in the big crash of 2008. Comes rallying back up, gets above the 200 and has some herky-jerky time. Guess when? May through August of last year, the summer, as expected, you had your pullback, and then a major, major, major rally. And look what we've come down to, traders. This is live right now on Wednesday as we're filming this TV show. Here's where we are in the Dow Jones Transportation Average and the 200 bar. They have met, and this should give us support. Let's go look at another chart. Okay, traders, now this is the Dow Jones Industrial Average, and it is the weekly bar chart. And here is what you are going to find both interesting and reassuring. This is a weekly bar chart. It goes all the way back to 2005. That's all I could fit on here. And I wanted to show you what has happened year after year in the summer. What you will find is that the U.S. stock market almost always has a major pullback during the summer. And then for the last quarter of the year, it has a nice fat rally. What do I mean by that? Dow Jones Industrial Average weekly bar chart. Each one of these green lines represents a full week's worth of trading. May through August of 2006, look, a pullback. The market was rallying. Summertime of 06, you get a pullback. What happens after the pullback? Major rally. July through August the very next year, 2007, you get a pullback. After the pullback, major rally to new highs. So, 06, summertime pullback. 07, summertime pullback. Here we are, 08. This was the worst year the stock market has ever seen, even worse than the 1929 crash. And you know what happened, traders? It still worked in 08. You had a rally all the way up until August and September, you finally had your pullback in the stock market. That was during a crash year. Then we come to 2009, the recovery year. Recovering from the lows, recover. What happens June, July, and August? Big pullback. September, rallies out, new highs. Then we go to 2010. May, June, July, August, major pullback. Then we rally for new highs. So traders, the summertime, or the months of May, June, July, and August, we are susceptible to pullbacks. 06 pullback, 07 pullback, 08 pullback, 09 market pullback, 2010 market pullback, and here's the great news, traders. This is 2011. Do you know what time frame this is right here? This is July through August of 2011. It is exactly what happened here, what happened here, what happened here, what happened here, and what happened here. What happened each time? we rallied out of the hole and had a fantastic end of the year. I do not want you to panic during this drop we're seeing. If you're in a 401k, I do not want you to get out of the 401k. That's for long-term planning. I want you to recognize that we have summertime pullbacks. Let's look at another chart. Okay, traders, the Dow Jones weekly average bar chart. Once again, same chart, but now it's got the 200 bar moving average overlaid on top of it. And look at how well it has worked on the Dow weekly. You tried to get down here during the May to August pullback in 06, but you couldn't get there and rallied out. You had a pullback, as we've discussed, in 07 in the summer, so 06, 07. But look what happens. It gets to the 200 bar moving average, has its pullback in 08, and then a major crash, right? Then starts to rally, has its usual pullback in 09, like 08, like 07, like 06. Rallies, has its pullback rallies, then has the pullback in 2010. But look where. Gets right to the 200 bar moving average and then has a major pullback. Finally rallies out after summertime, after August is over into September, it rallies out. Where have we pulled back to? Right to the 200 bar moving average. That's where we are right now. This is the weekly bar that we're looking at right now as I do this video. And here's where we are. We're meeting or conjuncting with the 200 bar moving average. Now remember, when it hits it, it fails. If it gets above it, it stays above it and rallies smartly. And every summer we have a pullback like this, and it is expected. Traders, pull your own weekly charts, do your own homework, but please recognize that you should not be panicking right now, that this pullback is usual, it is customary. We've seen it many years in a row. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.